Hey guys, and welcome back. Let me just check the sound here. Yeah, that looks alright. And the mic, it didn't reset. It has stopped resetting for some reason. Anyway, we've had a pretty interesting trading week. We're not going to do the recap today. We're going to do the recap tomorrow. And we're obviously not going to redraw because we already did that yesterday. So what we're going to be doing is answering the questionnaire. And I'm on full screen. I'm fully aware. Don't worry about it. Don't worry about it. Before we get into any of that, I'd like to announce that I do have a Discord. It'll be linked in the description. If you like the content in the video, feel free to join. Nothing here is monetized. Nothing is for sale. There are no courses, mentorships, affiliates, or anything else. Unless you have YouTube Premium, you notice that there aren't even ads on the YouTube videos. This is, in essence, just a trading journal. So let's get to the questionnaire for today. Just gotta make myself smaller. There we go. Me smaller. I don't have to be super small because it's not market scan. I'll keep myself here. All right. Are you comfortable? You feel uncomfortable? So this is always in the Discord. The questionnaire is always from the Discord. We're gonna start with the question coming at eyes. I have a question about how much, bro? Just see what percentage. What percentage of your portfolio you keep in you keep in stocks like SPY, and what percentage you keep in your trading account? What do you recommend? The question is coming out of Russia. Let me answer it. Let me mark it answered. So that is actually a difficult question because that depends on your confidence of trading. Right now, I have fuck. What is it? Probably. Yeah, it must be upwards. Yeah, because of the growth. Yeah. It, I tried to keep it at 20% earlier for my investing portfolio just because I want to keep things more balanced. I don't want to, trading is an active thing, and I want to have some kind of completely passive income as well. But the trading portfolio grows so fast that it's about, I'd say, a 90-10. That's a good analogy. But what you should do is whatever you're comfortable with. I know you're somewhat profitable. I don't know how profitable you are though over month over month. I know you have some good months. I know you use bankroll management though, so you probably don't have these huge drawdowns. So I would recommend basically the opposite. So this book that I recommend that all of you always buy because it is amazing. The Intelligent Investor. He recommends different. I don't know if you different types of speculative money asset. And one of them is the 60-40 formula. But essentially, you can flip that around the way you're doing it and have or deposit 60% of what you have. That could be an all right definite, or that could be an all right, or a 50-50 as well. That could be an all right recommendation for you. But keep in mind though, I know you mentioned 6% one month, some other months. Let's say you're doing 100% a year. That your trading portfolio is gonna outgrow the investing portfolio very quickly. So that kind of depends on what your plan is. Is your plan to just get a huge trading account, trade, live off of trading, or do you eventually just want to buy a income stock or index or anything like that? Something that has a really decent dividend yield and just collect dividends from that. It comes down to what you want to do. But general principle, the more confident you are in your trading, the more you put into your trading account. It's pretty simple. So after this questionnaire, you can tell me your confidence level in the Discord. We can get a little bit more into it then. But for the general person that's watching this, when you're just starting out, don't use anything at all. Let me check that the camera angle is all right, by the way. Yeah. Don't use anything at all. Just start demo trading your first 6 months or so. And then when you're done with that, start with a small account, like $1,000, $2,000. Tiny, tiny accounts. It's basically paper trading, but it isn't until you get used to trading. There's a lot of emotions involved when you're new and that kind of thing. So keep in mind here, I'm answering ICE directly here. When I'm answering the people in my Discord, I'm answering them personally. So this is not a generalized recommendation. Don't just go 60-40 or 50-50, like all of a sudden, like shabam. Start with the demo, start very carefully, and then work your way up as you develop into a more complete trader that can, most importantly of all, protect your capital. But for you guys, you're doing good. I mean, even going 100%, just putting it all into your trading portfolio wouldn't be wrong. It could technically be, but not in the long term. Because you mentioned buying some apartment in Mariupol, and I looked up that area, and the housing prices there, what the fuck, like they went up like 2,000% the last couple of years. That's insane. You're not gonna do that trading. So I mean, in that sense, but that's more of luck. So, but the point stands for you. It wouldn't be incorrect to put 100% of your liquidifiable assets into a trading account because you have proper bankroll management. So worst case scenario is it just slowly goes down over the years, and then you rage quit. Also, because you live in Russia, you don't have very high capital gains taxes on either of them, but for trading, it usually is even higher. Like in the United States, you have short term capital gains and long term. So if you're trading and taking out money, that'll be taken out as short term. And you have to pay a much higher rate. You'll pay the normal individual tax rate, which is federal 37.5%. It used to be higher before Trump, but 37.5%, that's the top bracket. And then in addition to that, you could be paying state taxes on top of that. I mean, you have something called the SALT, so a state and local tax deduction, so you wouldn't be paying it directly on top, but you'd be paying quite a lot. You can be paying 50% if you're in the United States. So you got to keep that in mind. But you're in Russia, so you're in a very trading favorable tax environment. I know itemization is really easy there. You can write things off. You can pay nothing really. You can get away. I mean, you're always going to pay something, but I'm in terms of capital gains. I hope that answers your questions. If you got anything else more you want to ask about, I do a 60-40. If you keep doing good, I mean, I think you have a year. You're close to closing up to a year of profitability. Man, fucking just do it 90-10, bro. But the general person go demo and start small. Second question here is from Timmy. So he says, "Hello, good morning, good morning, Timmy. We can see that Iran and the USA is having peace talks. My question is, if this is a big if the war ends, will the market react good or bad? And will our daily economy get better?" The question is coming out of Norway. That is there's relevancy to that. So Norway is an exporter of oil. So for us, it's not having that huge impact, but we still import more or less every good besides oil. So if you look at our trade balance, you know, our trade surplus, which just means that we export more than we import. If you take away oil and gas, we have a huge trade deficit. We import everything: clothes, cigars, electronics, every fucking thing. And all of that uses oil to get here. Even moving, but that doesn't affect us internally because again we have our own oil. But to summarize it, or I know you like the explanation, Timmy. So all of that, the entire supply chain of things, in an economic sense, from for example, some clothes getting from China over to here, that it gets made in a factory in China. That factory most likely uses oil in some capacity, in some way. They need it because they need to deliver the goods, and then that goes to some export facility, and then that goes on a boat or a plane or whatever, and they uses oil and gas to move things around. And all of that whole complex is funded by electricity, which might be used by oil and gas, and it is sustained by a whole economy, an ecosystem of an economy that is sustained by oil and gas. So as you can see, things will get better. For our daily economy, things will get much better. That's why you see SPY rebounded up to all-time highs. All-time highs. Let's have a look. All-time highs by far. Just off the war ending. Because it is a very, very bullish flag to me. And then when you ask, will the market react good or bad? I'm not exactly sure what you mean. Are you talking about our currency pairs or are you talking about stocks? Stocks will react positively because this is good for the world economy if the war ends. Your hypothetical scenario. This is good for absolutely everyone on Earth, except a few people. We don't even need to name them. But if you mean currency pairs, it's kind of bad. We get bigger ranges. You don't get these insane go fast 20% months when the war broke out. What is this? Oh, it's paint. It's paint. You don't get these 23.4% months. So trading kind of, and if you remember that video with the Bloomberg or on Bloomberg with Goldman Sachs, Jane Street, all those big traders, they're doing exceptionally well during these periods. Exceptionally well. They're hitting new records, new records, new records. Net profit records, like Jane Street with their 20 fucking $7 billion profit trade. Like, what the fuck? It's because chaos causes volatility. Volatility is good for us. Bigger ranges, bigger BOs, more continuations because things are breaking out SR and that kind of thing. So bad for us in the sense that we get less volatility in the currency pairs and less people running to commodities, gold, that kind of thing. Secondarily, for if you're asking about stocks, the market will react and is reacting very positively just on the hope. So guys, I hope that answers your question. If you guys got any more questions, feel free to ask me in the Discord. I'll answer you. But I do hope that was helpful. And I need to manually end the video again. Because this fucking keyboard, like, will bug you. Anyways, if you like this video, if you want more videos like this, feel free to hop in the Discord. That'll be linked in the description below. Again, it is free to join. Nothing there is monetized or anything like that. We're a group of traders. And again, this is just a trading journal. So if you are looking for a trading community, feel free to join us. I'm going to end it right here, and I'll see you tomorrow for the weekly recap. Thank you, and bye-bye.